Today we're going to talk about real estate investment trusts, or REITs as they're commonly known. REITs were created in 1960 thereabouts to give people the opportunity to benefit from investing for income producing property. REITs allow anyone to own or finance properties in the same way shareholders would benefit or buying stocks into companies or corporations. It's a sort of similar process. The stockholders of a REIT earn or a share of an income produced through real estate investment without actually having to go through and buy and finance a property themselves. This video provides some insight into what REITs are, how they work, and the benefits of them. The REITs industry has a diverse profile which offers many benefits to potential investors or people wanting to look into those. REITs often are classified in two main categories: equity REITs or mortgage REITs. Equity REITs own a wide range of property types, including offices, shopping centres, hotels, motels, medical centres. There's a variety of different types of property investments that they can invest into that people have their appetite for. Most of their revenue from the rent that is earned from these properties. Both residential and commercial property mortgage REITs get most of their revenue from interest earned on the investments in the mortgages or mortgage-backed securities. So they're being a bit different. They'll lend out money to securities, so they're still secured by mortgages, but they actually are lending it to another owner, and they'll earn interest. Return will be their income. To summarise for you what are the benefits of REITs, I'll go through quickly and just point out some of the main key factors. The main investment objectives of the first REITs are commercial properties can be obtained for stable rental dividends for the long term, very good for long stable properties with big tenants, good long term investment. The kind of investment growth won't be extremely high, but its profits every year are stable and ongoing. They tend to not invest into residential properties simply because the rental yield in residential properties like apartment buildings are lower than commercial property. Commercial property tends to have a bigger return of investment and therefore more attractive in a REITs type investment. Who's good to invest in these types of investments? They're quite good for people to invest in because you don't have to put your own additional security on the line or be personal guarantees. You just invest your money into the fund, and generally you have a large group of investors that will all invest a small amount to generate a large amount to buy a larger property, where they all get the benefit of. The company will make the overall commercial loans against the properties if needed, and generally this kind of large infrastructure, its income is more stable. The loan portion is relatively small and it generally has a good return of investment. Will not tie up too much of your own personal assets. Thirdly, it is often great benefit for your local government. They can take most of your savings money and invest in relatively stable long-term investments, and let every ordinary person in the city can become a landlord of the city, which is a good analogy that we like to use, giving everyone a good chance. Sharing the benefits of growth and is fast growing in a city. If you believe in your city's growth, invest in your city's REITs for the future, and I think it will work out quite well for you. Will you buy REITs in the future and become a new generation of landlords? I think that sort of gives us a quick cover-up of and a snapshot look at those. If you've got any more questions or queries or like more information, don't hesitate to contact us. Thank you.